You've heard about Bitcoin, maybe from a friend who bought some just for fun, and now seems to be bragging about their yacht. You've watched the headlines go from Bitcoin is a bubble to Bitcoin just hit an all-time high. And now you're asking yourself the one question everyone has been whispering for years. Did I miss the boat? You are not alone. And the surprising truth? The biggest gains are not made by the slick traders who time the market perfectly. They are made by patient beginners who learn the rules of the game and invest with a cool head, not a hot heart. So, forget everything you thought you knew about investing, because the most valuable advice for a beginner isn't about what to buy, it's about how to think. Now, before we touch a single cent, we need to clear up some of the biggest misconceptions that scare people away. Myth 1. It's too late to invest. This is the question that has been asked for over a decade. In 2018, people were told they were late to the party. Today, we look back and say those people were early. The truth is, the entire crypto market is still in its infancy. Major institutional investors, like big banks and investment funds, are only now getting into the game, with things like Bitcoin ETFs making it easier for them to invest. This suggests that the market is just beginning to mature and gain wider adoption. Think of it less as a race and more as a long-term journey. The best day to have bought Bitcoin was 10 years ago. The second best day is today. Myth 2. Bitcoin is a useless bubble. This argument suggests that because Bitcoin isn't backed by a physical asset like gold, it has no value. But think about it. The value of traditional currencies, like the dollar or euro, is also not backed by gold anymore. It's based on trust. Bitcoin's value comes from its utility, its scarcity, and its unique technology. It's a decentralized digital currency, meaning no government or central bank can control or inflate it. Its supply is capped at a fixed 21 million coins, which makes it resistant to inflation, similar to digital gold. Now, we can't talk about investing in crypto without mentioning the risks. We need to be realistic about what you're getting into. The crypto market is not like a traditional stock market. It's a wild west in some respects, and you must be your own security guard. The first risk is extreme volatility. The crypto market is known for its dramatic and unpredictable price swings. In 2024, the total market cap doubled to over $3.4 trillion, with Bitcoin surging past the $100,000 mark for the first time. However, this explosive growth was also met with sharp pullbacks, proving that while your investment can skyrocket, it can also fall hard and fast. This volatility can be a blessing if you're prepared for it, but it can also wipe you out if you invest with money you can't afford to lose. So repeat after me. I will only invest what I am willing to lose. This is the golden rule, and it's not a joke. The second risk you need to watch out for is scams and fraud. The crypto space is rife with scams. Bad actors use a variety of tactics to steal your assets, including phishing attacks, fake investment opportunities, and fake apps that look like the real thing. Unlike a bank, crypto transactions are generally irreversible, so if your funds are stolen, they are almost impossible to recover. Be especially wary of offers that sound too good to be true, like guaranteed high returns or get-rich-quick schemes. And the third risk is a lack of regulation. Unlike traditional banks, which are insured by government entities, most crypto investments are not insured. You are on your own. Many platforms operate with limited regulatory oversight, and if something goes wrong with an exchange, you have very little recourse. This is why it's crucial to do your research and only use reputable, regulated exchanges. All right, you've accepted the risk and you're ready to get started. Here's your simple 3-step action plan. Step 1. Choose a reliable crypto exchange. Think of a crypto exchange as your entry point into the crypto world. It's where you'll convert your dollars or euros into Bitcoin. You want a platform that is secure, has low fees, and is easy to use. For a beginner, a centralized exchange is the easiest and safest way to start. Reputable options include Coinbase and Binance, which are global players. In Europe, platforms like Bitvavo are popular and are often registered with local authorities, which is a great sign of legitimacy. When you're choosing, look for a platform that requires you to verify your identity. Step 2. Complete the Know Your Customer process. When you create an account, you'll go through a Know Your Customer procedure. It's a legal requirement that exchanges use to prevent money laundering and fraud. It typically involves providing your full name, address, and a copy of a government-issued ID. While this might feel invasive, it's a sign that the platform is operating legally and safely. Step 3. Make your first purchase. Once your account is verified, you can deposit money. Most exchanges allow you to use a bank transfer or credit card. Make sure the bank account you use is in your name. This is another fraud prevention measure. Once the money arrives, you can navigate to the trading section, select Bitcoin, enter the amount you want to buy. Even just a small amount like $50 is a great start, and confirm the transaction. Congratulations, you are now officially a crypto investor. Now you've made your first purchase, but your job is not done. In fact, the most important part of your journey begins now, securing your investment. There are 3 rules you need to keep in mind. Rule number 1, secure your account. Use a unique and strong password. I'm talking a mix of letters, numbers, and symbols, not your dog's name and your birthday. And always enable 2-factor authentication. This adds a second layer of security, so even if someone gets your password, they can't access your account without your phone. Rule number 2, understand wallets. A crypto wallet is like a digital vault that holds the keys to your crypto. There are 2 main types, and knowing the difference is vital. There are hot wallets and cold wallets. Hot wallets are online wallets, like the one on your exchange. They're convenient for trading because they're always connected to the internet. However, this makes them more vulnerable to online hacks. You should only keep a small amount of crypto in a hot wallet, just enough for what you're actively trading. Cold wallets are physical devices that store your private keys completely offline. Because they're not connected to the internet, they are virtually immune to online hacking, making them the safest option for storing large amounts of crypto for the long term. They are often called hardware wallets. And finally, rule number 3, protect your seed phrase. When you set up a wallet, you'll be given a seed phrase, a series of 12 to 24 words. This is the ultimate key to your crypto. Anyone who has this phrase can access your funds. You must write it down on paper and store it in a secure, offline location, like a safe. Never store it on a computer, phone, or in an email. If you lose it, you could lose access to all your crypto forever. Now that you know how to buy and secure your crypto, let's talk about strategies for long-term success. The best strategy for a beginner is dollar cost averaging. It's a simple idea. Instead of trying to time the market by buying a large amount at once, you invest a fixed amount of money at regular intervals, say $50 every month. This spreads out your risk and helps you take advantage of market volatility by buying more when the price is low and less when the price is high. It takes the emotion out of investing. Besides just buying and holding, you can also earn passive income with your crypto. 2 common methods are staking and lending. Staking involves locking up your coins to support a network and getting a reward in return. Lending means you lend your coins to professional parties for a return. Just be aware that these methods also come with risks, including the potential to lose your lent crypto if the borrower can't pay it back. Remember, the world of crypto is a fascinating and sometimes scary place, but with the right knowledge and a disciplined approach, you can navigate it successfully.